It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, September 21st, 2016. Boy, these markets are reeling after today's FOMC announcement, and we have some wide ranges to work with tomorrow, which usually means some pretty big opportunities are following as well. Crude oil is bullish and trading at the highs of two channels this evening. S&P is bullish and trading at the highs of its channel. Gold is bullish as well and holding the midline of a bull channel, which is usually a big clue. And the euro is trading at the highs of a trading range as we go into Thursday's session. We got big moves, big ranges, and big opportunities tomorrow. And we got a great plan of attack here for you guys tonight on this newsletter. Before we jump into it, though, please don't forget the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version of our nightly newsletter. And while you're here, don't forget to join the mailing list. In the upper left-hand corner, I'll send you an email every evening when this nightly newsletter is ready to be watched. Below the video tonight, you can download all the charts you see me using in tonight's video, right where it says click here to download today's charts. In the upper right-hand corner, if you're not a member here at School of Trade and you'd like to grab a free pass, you can grab your free pass through a $10 live trade room in the upper right-hand corner of the website. And please don't forget, we get a great trial membership here. You can learn more about what it means to be a member, and we get some great frequently asked questions available on our blog on the right-hand side. And I'm always here. Helping you guys out every step of the way. Hit me up on the live support button, and don't forget to join the free trial. You'll learn more with me in 1 week on my trial membership than you will anywhere else on the interwebs. I can guarantee you that. Hope you guys have a great week so far. Boy, oh boy, this fourth week of the month has been tremendous. Got a big day coming up tomorrow. Usually the big day is the day following the FOMC announcement. Today wasn't too bad at all, right? Pretty dramatic movement after the FOMC report, but tomorrow's the day when kind of the sugar high wears off and we start getting the real professionals participating. Looking at the schedule for tomorrow's Thursday, September the 22nd. We get some small news here tonight, in fact, about an hour ago here from the Royal Bank of New Zealand. So not expecting much here in the overnight session. I would expect, though, a lot of the overnight session to be dominated by reaction to today's FOMC announcement. We've got some minor news here as we go through the European session tomorrow. We got jobless claims, and of course, we got the existing home sales at 10 a.m. So news tomorrow morning at 8:30 a.m. and 10 a.m. Remember, there are only a few of these news reports every month. FOMC, non-farm payrolls, just name a few, that are going to have multi-day impacts, right? Long-term impacts on what happens. Tomorrow is a big day. We do have news at 8:30. We do have news at 10 o'clock tomorrow. That's pretty much all we have. Nothing in Asia, nothing in London, nothing in the afternoon tomorrow. I would imagine everybody's watching what happened today and using today's information, right, the announcement, right, to make their trades for tomorrow. So all eyes and ears will be focused on the reaction to that announcement here tomorrow. And let's try to make some sense out of this chaos-filled afternoon after, of course, the FOMC announcement. Crude oil is bullish and trading at the highs of two channels this evening. We get a spiking channel and a regular bull channel, which means buyers are waiting for a decent pullback off the highs, and sellers will begin trying to find a top in what has been a strong bull market after the FOMC announcement was made earlier today. The buyers have clear control over this market right now, and this is going to be a pretty common theme, right? We get a lot of bull runs after this. Tomorrow will be the day where we really see the dust settle here. We don't usually see everything going in one direction. So the bottom line is on crude oil, and this is very similar to gold and the S&P right now, the buyers have clear control of this market. But trading at the highs is just not really ideal to be looking for buying opportunities. So bulls will be wise to look for a pullback to the lows, right, of this channel, ideally all the way back into that correction zone off the spike in channel for a move back to the highs tomorrow. Sellers, on the other hand, need to either gamble with trying to sell the highs or sell the overshoot of the channel, or really wait for a more reliable opportunity after they can make a new lower low and hold a pullback tomorrow on the way back down to the correction zone around $45 a barrel. This is always, when we look at this chart right now, the very first thing that stands out is, all right, so obviously we get some slop and chop around the inventory report today. we did a really good job today in our trade room dealing with a very, very narrow range. If you're with me today in the trade room, right, I hope you guys agree with me on that. It was pretty tight range this morning for most of the morning. Inventories, FOMC did a pretty darn good job with the amount of movement that we had. Then, of course, all hell breaks loose after 2 o'clock. We got a bull channel. Right, this larger bull channel may not even come into play tomorrow. You'll notice here we're kind of trading right at the high of that big bull channel. I think what's a little bit more reliable or more useful is this little spiking channel, right? This little guy right here, because that's obviously coming right after the inventory report came out, and it's of course into the FOMC announcement. One thing you notice about this chart is that, yeah, there was that big move after the inventory report, but there really wasn't much reaction from FOMC, and that's one of the many reasons why we really appreciate the crude oil market, right? I really appreciate the fact that the crude oil market, right, that the CL doesn't freak out with every little news event that comes out. Much like, unlike gold, euro, and of course the E-minis. It's one of the big benefits of trading crude. It is a lot less susceptible to the whipsaw that comes with most economic news. So that bull spike in channel gives us now a correction zone. That correction zone, of course, will be from that 45.10 down to that 45.90. And then also inside of that area is the battle zone, also from 45.08 to 44.94. So when I look at this right now, the first thing I think is, okay, we're looking for traps right now. Looking for traps below the 45.25, below the 45.10, right? Below this 44.90 area. And that's ultimately where the buyers would love to get this opportunity as this thing pulls back. Trap low, seller failure, back to the high. Trap low, seller failure, back to the high, right? Digging into this area of support. Now, very, very similar to the other markets we're going to see tonight, this looks like a pretty strong trend. So any opportunity here below an area of support is going to be an opportunity here for buyers tomorrow. So by support levels, I'm looking at 46, right, the double up, 45.25, 45.10, the battle zone. This market may just poke its head back below 45.46 and then get pinned right back to that high. Poke its head below 45.25, failure back to the high, right, and rinse and repeat. So when we see a strong move like this, the S&P is a really good example of this tonight. We may not get all the way back down, right, into that battle zone, into that correction zone, because there's just so many buyers in the market right now that as soon as this thing pulls back to any area of support, right, we want to be open to what we're looking for is as it pulls back lower, sellers are going to try to reverse it, right, selling lower. We want to look for those sellers to fail and then look for that, right, and then look for that buying opportunity here tomorrow. As the price pulls back, right, we're expecting here to see buyers enter the market. One additional thing you want to keep in mind is that measured move overhead, right? If we get to the measured move, and many of you are going to, right, I'm going to sound like a broken record like I always say, when we get to a measured move, we either need one of two things. Either that two-legged correction, right, back to an area of support and then back up, or we got to see a real strong breakthrough, breakout, pull back, and try to run up to that triple up. Obviously, if we get to the objective, then we want to wait for that two-legged correction back to an area of support. Which area of support? Again, we can't really tell which one's going to be right now. 45.46, 45.25, right, 45.10. It's really tough to say which level of support at this point, but we'll be looking for that two-legged correction, 1, 2, right, a symmetrical correction off of that measured move, because the measured move is a market objective. Or we got to get it to go right through, blow right through it, get that moving average to meet us above the measured move, and then we can look for that move, again, buying above the measured move, get the moving average above that measured move, and then we can go looking for a triple measured move to the upside tomorrow. Very difficult to tell where it's going to happen. We'll look and see what happens now. If it pulls back, we're looking for a pullback to support. If it busts higher, just be careful not buying high, right, unless we can see this really dramatic push, dramatic enough to get that moving average up here if we can buy that pullback above it. How about the sellers? Now, if you're thinking about being a bear right now, well, the first thing I noticed today was we had a gap, right? And this gap, right, was giving me the stink eye all day today, right? because usually we don't go a full day without filling that gap. I thought for sure when we saw this correction after the inventory report this morning at 10:30, I thought for sure they're going to fill the gap and we're going to go right back to those highs. But boy, oh boy, this has to be on the minds of a lot of people tomorrow. We just don't see gaps from one day to the next. Weekend gaps, sure. Day-to-day gaps, though, ooh, boy, this is a really big, the reality is that gap becomes a big deal tomorrow if these buyers can't keep this price up here, right? So I would assume, again, you got the correction zone, the battle zone, right? Buyers will look at these as opportunities here, right? But if we get a real strong move, sellers hold that pullback. That'll be their first opportunity here to be a seller off those highs. The buyers have all control right now, right? So I'm not going to try to gamble my account away. One option for the sellers would be a double overshoot here. You can try to gamble right after a double overshoot, but you're selling in a very strong bull market. So what's more reliable is to get that pullback to hold. Buyer failure, hold that pullback. I would recommend staying away from this battle zone here because you get the low of that channel, the correction zone's there. I always say skip that stuff, wait for the breakdown, and then look for that move, right, to go back down and fill that gap. It's tough because how we react, there's a lot of support levels away right now. It's a very strong bull market, so it may not be until at the end of the day tomorrow or even on Friday, right, a big reversal on Friday. It's tough to call that just yet, but I would imagine how this market treats this low of the bull channel and this correction zone, if we just slice right through it like it's nobody's business, you can put your money on the fact that we're going to be, right, put a small percentage of your money on the fact. Let's be very specific on this. Bring up money, right? We don't want to risk. We're not risking more than 3%, right? According to our account size, right? But you can definitely expect now those sellers to be drooling over a gap fill, and the actual gap fill is actually at 44, right? 43, right? That's right. We're not going to put all of our account on risk at any time in these markets. So we know, of course, a plan for tomorrow. Bulls are in control. Sellers have to take it in the short term. The sellers would love to get back down into that correction zone. Then, of course, in the long term, right, get down to fill that gap. This should be an interesting day tomorrow. Like I said, today was pretty much just a sugar high, right, of the FOMC announcement. And so we're going to see what happens when the dust settles tomorrow. The professionals come back to work because professionals don't trade the FOMC announcement. In order to become considered a professional trader, you have to have survived long enough to know better than to mess with Yellen and co. Boy, did she look like a deer in headlights today. That press conference was some of the best drama I've seen on television in the land. Oh boy, I'll keep my opinions to myself, but I'll tell you, I don't think Bernanke ever looked that worried back and forth to those reporters. You could definitely tell that she had that bulletproof, or she had her guard up. Let's say that today. Remember, I could really care less what comes out of her mouth. I'm going to be trading the chart like everyone else in our School of Trade community. But it was an interesting few hours there watching them kind of pepper and try to put words in her mouth today. One of the more exciting press conferences we've seen in quite some time. How about some S&P? Now you want a bullish market? Yeah. This is definitely a bull market here. We're bullish. We're trading at the highs of the channel after a strong push from the buyers, which means buyers will be trying to use that strength to either look for a breakout pullback above the channel high or wait for sellers to try and reverse the move and look for failures. Sellers, on the other hand, have no proof of control, so they need to avoid trying to call a top and wait for price to get back below support levels and hold a pullback. Or they'll have to gamble with selling an overshoot of those channel highs. Sellers right now need to take control first and then look at getting that move lower, right? Almost identical to what we talked about on crude oil. This is a much more dramatic move. The strength of this move higher tells us that we most likely won't see a correction all the way back to the channel lows, although anything's possible tomorrow when the professionals come back to their desks. So the most reliable thing to do is either wait for a pullback to support levels below or rely on a strong break higher for proof of the move, right, up to that double up target overhead. The very first thing we look at right now is that they blew right through the